Hello, I'm Dr. Matthew Sim. How are you feeling today? I hope you have a great deal of aspirations. If you are feeling sad, uh, you should take up a sport, maybe baseball, or plan for a trip to Israel. Right? When you're in Israel, go and visit Vad Yad Vashem, YAD Yad Vashem, VASHEM, or the Holocaust Museum. I was there. They brought me over there on a tour. It's a very interesting place. It's a very sad place as well. Once you go in there, you realize how evil some people can be, right? And after that, you also realize why the Israeli soldiers are one of the best fighters in the world. I was told that all young Israelis are made to go to the museum, right? And once you have gone through the museum, if you're Israeli, I'm sure you will fight to the death, right? Because you really don't want the same thing happen to your family. Well, that is their history. EPSIA. Okay, today I'd like to talk about the problem with global stocks valuation. Stocks in different countries are not all the same, right? It depends on the government of the country, whether they regulate the stock market and the stocks themselves, right? In the US, you can trade on the New York Stock Exchange, the NASDAQ, and there's a lot of regulation. And whatever a company puts in the annual report, there's a lot of standards they have to follow. There's a lot of checks and balances, and there's a lot of tight regulation. And that's actually very good and bad. The bad thing is, of course, it increases costs for the companies. The good thing is that whatever we see in the annual report or whatever is reported, more or less the retail investors, the average investors like me, will know that it can be trusted. But the same cannot be said of the stocks in many developing countries where the control is less stringent, right? So a stock in a developing country is not the same as a stock in the USA or a stock or shares in Britain, right? So that's the problem. So in a developing or emerging market countries, if you get an annual report, you're not sure whether everything is factually correct and whether the controls are tight enough. So that is my problem with trying to get a good estimation of the value of stocks in emerging markets and developing countries. You have to, that's what, well, in engineering terms, you have to give what you call a margin of safety, right? So as a retail investor, average retail investor, you probably have to discount whatever is reported in the annual report by some amount just to be on the prudent side. And that's my problem with global stock evaluation and assessment. See you next time. Boom.